And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow. Hello, everyone. Welcome to this week's Wealth Within Update. I am Jim Beach of School for Startups Radio, and with me, as always, is Dale Gillham of the great book, Accelerate Your Money. It's your choice. Wait, Accelerate Your Wealth. It's your money, your choice, and of wealthwithin.us. Dale, welcome to the show. Sorry, I got the book title wrong. How you doing today?
Hey, look, I'm fantastic, but that just makes it even more special when you get it wrong and then you get it right again. So, but,
that's right.
Makes people listen a little bit more.
I'm doing it from true memory, so that's, I actually know the name. So, Dale,
that's fantastic.
Last week I started the show by saying that the market was up, one of the best months ever, and I didn't feel up. This last week, the market was up 2.5%. I think the Standard & Poor's was up 3.5%. I'm down 2.5%. I don't feel up. Again, the market's totally detached from reality that the world is living through.
Yeah, it is quite crazy times, and I think I was saying it last week or a couple of weeks ago that the market's going up on nothing, and it really is. It's all about speculation, and you're right. The Dow was up over 2.5%, and the S&P about 3.5%, but the Dow's still down around 14.74% for the year, and the S&P is still down around 9%. Now, both of those have now pulled back into that territory near their all-time highs to say they're not necessarily bearish now. We're not in a crash situation, but it doesn't feel like it. But the interesting thing is the NASDAQ is up for the year, for the calendar year. It's up 5.58%. And it's because of those tech companies. We're talking about Nvidia. I know I've mentioned Nvidia numerous times in the last 12 months as a stock to watch, and some of those other Qualcomm's, other chip manufacturers, and they're all doing well. Microsoft's doing well, Apple's doing really well. But how long is it going to happen for, or how long are we going to rise? But the interesting thing, and this is what people don't see about the marketplace, is they just sort of see what's on the news every day. Or somebody says, the Dow was up 3% today, but the Dow has only grown 2.5%. in the last 20 trading days, and so it really is slowing. Now, just to give you a bit of a comparison, it rose 30% in 13 days from the low on the 23rd of March. So 30% in 13 days from the low on the 23rd of March, and yet it's grown 2.5% in 20 trading days since then. So that'll tell you how much it's slowing, and it's just really flatlining. And that tells me that the big end of town is really nervous about this market, and the longer this happens, the more I'm thinking the market's going to go south, even though it doesn't look like it. And I think that's where you're getting that disconnected feeling from, because it's not pushing through. I need to see a nice push through and get right back up to near those all-time highs before I'm even going to get mildly excited about the market at this point in time. But hey, that's what it is.
Well, I remember from many of our conversations, you've been predicting that a 15,000 low is still within the realm of the possibility that historically that looks like that could very well happen. It seems to me that, again, on the market going, as you said, up on nothing, that a tiny black swan comes around, a second wave, a second lockdown in a major city, it will get that 15,000 point really quickly. I feel like we're just getting set up for you to be correct a week or two from now, unfortunately.
Yeah, look, I don't wish it to go down. I do really want it to go up. Me either,
exactly.
And I'm sure Trump doesn't want it to go down. And I find some interesting comments. I had people saying, Trump's forced the market to go down. And I went, well, what planet are you on? No president wants the market to go down. And then I'm getting a lot of people commenting on the Fed just keeps propping up the market, and it's got to crash big time. And the Fed's there to support the economy. That's what they're there to do. So to me, there is a lot of people with not much knowledge actually getting out there making all these decisions. And to give you a bit of an example, our SEC produced a report last week and it monitored the retail traders for the period in March, about 4 weeks in March. And the statistics were absolutely amazing about retail investors and retail traders not knowing what they're doing and losing hundreds of millions of dollars. And they've had, you know, three, 4 times the amount of new accounts being opened with brokers. They had dormant accounts opening, activating at enormous rates. People were trading things like foreign exchange and highly leveraged instruments in big time, and day trading with no knowledge, and buying one day and selling in that day. And if they'd held one more day, they would have made money, but because they didn't, they lost money. And it was just showing retail people get it wrong all of the time. And I think a lot of this rise at the moment we've seen on the Dow has been a little bit more retail investors and people just speculating. But as I said, I don't think it's a strong market at this point in time.
Well, you have billions of people sitting home with nothing better to do than be a day trader. So, ooh, boy, let's go off and be a day trader. There's a great solution. All right, let's move and talk about some of the specifics that happened during the last week. The unemployment numbers were, of course, record level, historic levels. But yet the market still went up on that news. I guess we were expecting it to be worse than it was. It was still, what, right at 15% with 20.5 million jobs lost. How'd the market go up on that news?
Well, there's probably a couple of things in there. I mean, obviously we were expecting somewhere around 15%, so that wasn't a big surprise. It was a little bit underdone, if that makes sense. They were expecting more. All the analysts were expecting a little bit more than what we did actually get, so that was a positive. But really, that's the highest unemployment we've had since the Great Depression, back in 29, where 1 in 4 people were unemployed, or since the war. So, but remember, unemployment in February was around 3.5%, and that was like 50-year low, so it's gone massively. But so although the figures were bad, they were slightly better than forecasted, as I mentioned. But what analysts are looking at is around 90% of the 25 million jobs were 20.5 million jobs. They were temporary jobs, and these were mainly in leisure and hospitality, and that was the biggest sector that was the biggest loser in terms of people. Restaurants, airlines, anything to do with tourism, leisure, hospitality, lost a lot of casual jobs and temporary jobs. But it also hit women harder than men, because women tend to have a few more of these contracty roles or temporary roles and casual roles. So I think what the market was thinking of, if we do open up and get back again, a lot of those people are going to get re-employed back into those areas. But I'm not sure where we're going to get that many. I don't think the unemployment rate's going to drop back to 3.5% anytime soon. I think it'd be a long, slow move back to that way.
I would have to agree. Let's talk some specific sectors and stocks now. First sector or first industry, oil. What's happened recently there? Have we stabilized?
Yeah, it looks like oil's a bit stabilised. I mean, obviously, we talked about 3 or 4 weeks ago how there were production cuts on oil to avoid the oversupply. That happened anyway, but it looks like that's starting to take effect. And obviously, as the country or the different states are opening up, people are starting to drive. I've noticed more people on the roads here. Just going down the road for coffee, a lot more people are out. So there's going to be more demand for oil. There is space at this point in time, so I don't think we're going to see more negative prices in oil contracts into June and July and August, but hey, it's possible. So oil may have stabilised, but you might need to expect that the fuel prices at the bowser, gas might go up a little bit, but I don't expect it to rise very, very much. I think it'll just stabilise roughly where it is for a while, because until we really get production ramped up, there's not going to be huge demands on oil.
What about the larger energy sector?
Actually, the larger energy sector looks pretty good, and I think we might start seeing, I'd be looking at things like renewables, in some of those different renewable energy type companies, because I think now's the perfect, or has been a perfect catalyst or argument to say, hey, look, we need to investigate more about renewable energies such as solar, wind, sea power, even look at hydrogen. Hydrogen, the only thing that's a problem with hydrogen, it takes a little bit of power to get hydrogen to happen, but I think that'd be a future industry we're looking at. But energy is always going to be a great industry to look at from a portfolio point of view, because we all use electricity, we all use other different forms of energy like gas, and obviously we all drive, we need diesel, all those sorts of things. So again, it's a good sector to look at, but there's some good stocks in that sector. But I can come back, I couldn't name one of those at the moment, but I can come back to next week with some good stocks in the energy sector.
What about in a related sector? Absolutely my favorite stock name to say, I hope I pronounced it right, Schlumberger.
Oh yeah, that was one.
Schlumberger?
Yeah. Schlumberger, I don't know.
I thought it was Schlumberger. I could be so wrong. But anyway, if this is wrong, edit this part out.
Yeah, no. I'm agreeing with you. I don't really know how to say it, but it's one that I've been saying for about 6 months to keep an eye on, because it has been so heavily hit. Now, I know it's closed down 2 or 3 of its refineries at this point in time, so it is in oil and gas. So, but as I said, it does seem to have steadied the oil sector. But Schlumberger, however you want to say it, it is one of those ones that I do like. EOG Resources is also in oil and gas, and it rose 15% last week, even though they also plan to cut their budget, and an additional 100 billion in the first quarter earnings. And earnings fell over 90% from a year ago. So, but the stock's up 90% since March. So go figure. Schlumberger, that's up 14%. And only 2 weeks ago, it was reporting revenue and profit dropping along with cutting jobs. That's what I'm saying is there's a lot of how do I say it? A lot of companies rising when there's not a lot to support that, and that's really the issue that I'm finding at the moment. We're seeing companies rising on no news or not good news and still doing okay. So interesting.
Let's ask about a company that's a little bit easier to pronounce. Apple.
Apple. You got to love the stock, don't you? It really is a good stock. It's it didn't get to being the biggest stock in the market last year for no reason at all. It's Apple's really adjusted to this coronavirus really well, because what it's done is it's online store. It's revamped what it's doing there, and what you used to go into the physical store, which has all been closed down. All the Apple stores have been closed down at the moment. They're providing support in all their other online services and training and everything, all online. And so they've been doing very well. Actually, their online stores has been flying, and so we may not see a full return back to what Apple were doing. Remember, retail space in shopping centres is quite expensive, and I don't know about you, but every time I go anywhere near an Apple store, it's packed. So if they're getting some people staying at home and doing what they need to do at home, I think it's going to work. But Apple's doing very well at the moment. It's one of the top performers on the S&P 500 and definitely in the market, still doing well. Microsoft is also doing very well, as is Nvidia, which I mentioned. Netflix is doing fantastic. I think it's up over 30% this calendar year, or even in the last month. It's doing so well. So there's some good technology stocks out there.
PayPal.
PayPal, 20% last week. That's interesting. In the 1st of May, they had their largest one-day transaction, and they just said it basically missed analysts' expectations, and the total payment volume was up around 18% year over year. So looking good. Everybody using, obviously, getting onto eBay, Amazon, etc., buying goods from there rather than using their credit card or their tap and go at wherever they've gone. So you would expect PayPal to go up as well. And Uber. That's an interesting one. Uber was really interesting to me in terms of Uber's never made money, and we've talked about that, you and me, before, as it's never really made any money. But and we know its ride-sharing division has always been weak and it's not made money, but its Uber Eats and its other divisions were making money, and they were expected to make money as an overall company this year. But its ride-sharing business was down around 80% in April, so a little bit of a hit there. However, it's not surprising, as I said, because it's never made money, and coronavirus, why would you get into somebody else's car and go somewhere. So I think we're going to see more worse numbers out of Uber, but basically all the downside on the Uber ride sharing was taken up by Uber Eats, which gains dramatically during this COVID-19 shutdown now. But Uber's up 139% since the 18th of March. Now go figure, even though it's posted a $3.5 million loss. How does that work? I really don't understand that one. It's really confusing to me, and that's why I'm saying, and what you've been saying, I think there's a big disconnect between the market and reality.
And speaking of disconnect between market and reality, Elon Musk looks like he's about to get a $750 million payday because of his stock appreciation. What do you think of that? Oh, and he also tweeted, I love it when CEOs or presidents tweet. It indicates so much forethought. He tweeted that he was going to move to Texas or Nevada, and one of our esteemed California legislators sent him back the F-bomb. Again, such foresight. You and I love to talk about Elon. What are your thoughts this week?
Hasn't it been a roller coaster ride for Tesla over the last 8 months? I mean, it shot off and everybody was wanting to short it, but it just kept getting higher and higher and higher. And then I think it was about 2 months ago, I said, oh, just be careful. I think it was February. I said, be careful. It could be going to go down. And then it tanked big time. Because obviously its China factory closed. It's found some support and is looking a little bit better. So right now I'm more bullish on that, or on Tesla at this point in time. Sales for vehicle sales throughout the US throughout March, and I think even April, were down over 50%. If you want to buy a motor vehicle, now's the perfect time. You will get some phenomenal deals. There's a huge oversupply in I was going to say rental vehicles, but used vehicles, because rental companies are dumping a lot of their stock, which they normally do, into the second-hand market. So if you're looking for a good second-hand car, there are plenty out there. And if you're looking for a new car, they can't get rid of them at the moment, and they don't know when they'll be able to get rid of them. So very, very good time for car shopping. Not sure it's going to translate to Tesla, but Tesla's more like an aspirational product, like an Apple computer. People, you either like Tesla or you don't, and they have a lot more devotees those sorts of people that just want to drive a Tesla rather than just buying a Dodge or buying a GM or something else, or a Ford. People want to buy the Tesla, so I think their sales won't be affected as much and they'll do a lot better. But again, good opportunities out there if you want to buy cars.
Dale, great to talk to you again this week. In our final seconds, what do you expect to happen in the upcoming week?
Look, I think it's going to be, unless an announcement come out, I think we're going to get more of the same, this sideways, not moving up much, not moving down much, but I can feel it in my bones. Something's going to come out fairly soon and the market's going to push south, and I really think that's going to happen. To me, that's the higher probability than going up, but hey, I've been wrong before and I'll be wrong again. But at this point in time, I think down we're going to go, and it'll happen maybe in the next 1 to 2 weeks. That's what I'm looking at. So just hang on for the ride. Again, like I said a few times, I've said I think 80 to 90% of the falls already happened to that low in March. So if it falls down to that, that's a big fall, but it might only go another 10% below that. So, but hang on for the ride.
Dale Gillham, find him at wealthwithin.us. Dale, have a great week, and we'll talk to you next time.
Thanks, Jim. You take care.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Alrighty, well, let's get into the charts of the Dow Jones, and it was another interesting week, as Jim and I was chatting about. You know, the market was up, and yet the news was bad, and this disconnect really does worry me. And I know I quoted some statistics on retail traders in Australia that our SEC did here, but I can guarantee you if the SEC there in the US did exactly the same research, they'd come up with exactly the same statistics. And most of the people watching this video you would be considered retail investors, if not 99.9% of you would be considered retail investors. And what it does, what these statistics highlight, is that so many people are out there with so little knowledge trying to make money. And as Jim was saying, it's like it's crazy. If you've been made redundant, lost your job, whatever else, and you're thinking you're sitting at home, well, I'll try and make some money on the stock market. It really is. The only thing I can say is an oxymoron, and probably the only comment I can make is, would you give all your money to somebody with your knowledge and experience to trade for you in the hope of making money? And if your answer is no, then why are you doing it? And that's the real interesting thing. You need to have a look at it. So whilst you may have made money in that last 4 to 8 weeks while you're sitting at home, it would have been a lot more guesswork, a lot more luck than good management, and the market will teach you a lesson. It's just your choice how much or when that happens from that point of view. But let's go and have a look at the Dow Jones. It is looking a little bit better, as we said, but when you're looking at the statistics that I was sharing with you earlier, this is not a bullish market. We can see here the close here back from the week ending the 10th of April. The market was beautiful bull run, and this was at when we said it rose very, very strongly for 30% in those first 13 days. And then since then, it's done really nothing. You can see the close here, and close here. We're closing lower than what we were 2-3 weeks ago, and this is not a strong sign. But the good part about it, it's not falling away either. The market's sitting here around here. I would have expected we would have kept going down through here, but we haven't. And it is looking quite nice. Let me just get rid of that. I was playing a little bit, but I was expecting a fall over. Now, if we don't see a strong move up this week and a breaking through roughly that 24/7 30-point level there, then I'd say this market will start to turn over, and we only need a little bit of bad news. And as you remember, I would say, I've said it numerous times, the market goes up in stairs and down in elevators. And right now somebody's got their finger on that basement button, and it just needs to be pushed, and the elevator will start flying down. And this is where a lot of retail investors don't know how dangerous the current situation is. And it's always, and people say to me, why are you saying sitting on my hands, Dale? Because the market's going up, the market's going up, the market's going up, and that fear of missing out is really seeing a lot of uneducated retail investors and traders take high risk with their money. And sometimes it's best just to sit out and wait and then come on in, because once it does that next move down, the move out of that will be even better. And that'll be the safest time to go and get into stocks. But let's get into our questions for the day. Thanks for sending in your questions, everybody. And if you do have a question for me, you can also send them in like these people have. And the first question we've got today is from Jared, who says, "Hi Dale, thanks for all of your work. That's my pleasure. Any thoughts on TJX?" So let's go and have a look at TJX on the chart. This is a stock called TJX Companies. And looking at it, it does look like it's holding up a little bit, but if you're looking at lots of stocks on the market right now, they all look pretty much the same. There's the high there back in February, big move down in March, and they've bounced a bit, and they're holding around in that holding pattern. So there's your close in March, and it's closing around that same level. But is this moving up or down? You don't ask me whether you want to buy it or you don't own it, and you don't own it and you want to buy it, or whether you've got it and you're thinking about selling it. But again, this stock's not pulling through. There's the highest close there, then we got one there. This is last week's close, so it's like the Dow, it's holding there in that bit of a holding pattern and slowly tipping over. Here's the close here. That's the week out of that March low, and the close there is almost the same as the close here. Again, that's not saying me there's a lot of active buying on this company. There's a lot of people sitting on their hands waiting for direction, and that waiting for direction is the thing. To me, I wouldn't be getting in this stock till it really blew apart, went above that high there at 52.62. So I would be looking at getting into it, because it really is not showing me it's bullish. If it does go south, it will go south pretty quickly too. So just be careful on that one. But thank you for the question. The next one we've got is from John. John, who says, any thoughts on INSG in Seago? It's a 5G stock, obviously. 5G's being rolled out everywhere. So looking at the chart, it's just taken off like a rocket, hasn't it, this 5G chart? A lot of technology stocks have, and a lot of people are thinking, 5G. Look at this stock here. If we go right back, and you can see here, you could have bought it way back in 1996. as you could have bought it in the last month or so. Again, much more of a trading stock at this point in time. A lot more speculative. Would I be getting into it right now? Possibly not. It did spike very, very quickly there in April. A lot of people would have been trying to bottom pick it, thinking it was really dirt cheap. Given it's in 5G, that's great, but there's a few players in 5G, but it's understanding what its longer term plans are, and there's a huge expense in rolling out 5G equipment, etc. But let's look at the weekly chart and have a quick look and see what that is doing. On the weekly chart, you're seeing here, yeah, it's not super exciting to me. I'd just be sitting back and waiting. I'd want to see a bit more of a downward move down around to this $9 to $10 mark, and if it did do that, then I'd start to get excited about it when it started to take off again. But right now, it's not sort of a stock that I really get excited about. But hey, do your research on it. I want to show you a couple of other stocks. We did talk about, with Jim, I talked about Nvidia, and also we talked about Schlumberger or Schlumberger, however you want to say it. Nvidia, you can see here, it's done beautifully well the last 6 to 8 to 10 months there. It's done beautifully, and it's holding up quite nicely. This is the sort of stock that I would suggest people go for. You know, some of those chip manufacturers, they're doing so well at this point in time. Your Microsoft, your Apples, these are the ones I mentioned for you. I don't see them having big issues here, and still looking much, much better on a weekly chart as opposed to some of those other stocks we've just looked at. These are better. And people will go to me, well, hey, it's already up around this price. It's not cheap. Well, what is cheap? And this is the issue that I find a lot of retail investors have. They don't understand cheap. They don't understand what cheap is, because it's cheap compared to what? Let's say the last stock, the 5G stock in Seago, let's say that's worth $100 a share. That's the intrinsic value. It could be trading at $200, but that makes it expensive, or it could be trading at $50, which makes it cheap. But you need to have that comparison. Whatever the price is on the right-hand side of the scale, whether it's $1 or $1,000, is not really relevant. It's what is the share worth to what it's currently trading. And so that's what you really do need to look at. And a lot of people don't see that. Whereas Nvidia has a lot more probability in my mind of going up than some of the other stocks that I've seen people push through. But let's go and have a look at Schlumberger or Schlumberger to see what that is. And you can see here how that's a big, big fall right from that high there back in 2014, and obviously it's in coal and oil. I see the current shutdown as being a bit of a challenge for it, but going over to that weekly chart, you can see again it's not as bullish as some of those other stocks, which is suggesting oil and gas stocks aren't great at this point in time. But if oil is basing, and as we said, Schlumberger did close to, I think it was 3 of their or refineries. So we're seeing, if we do see this thing holding support of that and start to move up, that could be a very good cheap buy in terms of retail investors. It could be a very good opportunity because it has fallen so heavily over such a long time. And if oil starts to come back, they're going to start making more money. What they would have been doing over the last few years is getting themselves a bit more lean and meaner. They would have been losing money. They would have been tightening up things, becoming more profitable. And this is what happens with companies that are falling away. They're falling away because people don't want to own them because of negative economics around that stock. Their earnings are dropping, all sorts of things are happening, but eventually everything washes out, and when it all washes out, then the stock must go up. So this could be the one to watch for a little bit of a while, but hey, I don't know. It could be sitting where it's doing for quite some time, and it could fall a little bit further. Just make sure you've got some rules around it. If you want to understand some rules, get my book, Accelerate Your Wealth. It's your money, your choice. It's available on Amazon and good bookstores around the US, if you can get into a bookstore, but just get it off Amazon yourself. But thanks for sending in your questions, and thanks for watching till the end of this video. Now, if you do have a question for me and you'd like me to answer it, just stick them below. And but also tell me a little bit about it. Do you own it? Do you not own it? You're looking to buy it? Tell me where you live. You know, we're getting a lot of people around the US and indeed around the world watching these reports. Just let me know where you are, and I'd love to hear where people are watching from. But remember, I do these reports every single week, so hit the subscribe button now. Also, click the bell on the right of it so you know when we go up to date with a new report. For now, I'm Dow Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.